Well, good afternoon, everybody. Sorry you had to wait. I had no idea that Dwayne must be having some kind of issues. Anyway, I'll do my part. And then if he shows up, well, he can do his part. And if he doesn't, well, I can jingle John and see if he wants to come on. And today's Tuesday, so there's no Dr. Tom today. Well, let's just get right into it. Okay, hold on. Here we go. Good afternoon, everyone. Today is the 5th day of May, 2020, 5/5/2020. If you have not taken a free trial with us, go to the homepage at CFRN.net. Right here it says free 5-day trial, no credit card required. You click on that, then scroll down to where it says, it's going to take you to this page, EminiTrainingschool.com. Okay, let me go through that again more slowly. If you have not taken a free trial with us, go to the homepage at CFRN.net. And right here it says free 5-day trial, no credit card required. Click on that and it will bring you to this page, EminiTrainingschool.com. Now you can go directly to this page if you want to. You don't have to, but you can. And scroll down to where it says 1 week free trial. All we ask for is your name, your email, and your phone number. You can fill this in if you want to. Hit the send button. This is the optional one. These are required. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay. Once you do that, then you will be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click on the confirmation link, we don't know that you took the free trial. No. Results today. I don't know what happened here. Why it doesn't put the 2020 on. It used to do it automatically all the time. But anyway, today is the 5th day of May. It's 5/5/2020. We made 5 ticks in the euro. We actually made 10 ticks in crude, but I'm only putting down 5. And 29 ticks in gold. And that put us at plus 371.25. Let me just check that crude. Yeah. 371.25 on the morning session. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. I have to say that. Today, took 24 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 6 trades this morning. So on the month, that puts us at 671.25. That's over 3 days, averaging 223.75. Yeah, these numbers down here. 300, 290. Yeah, I guess that's right. Okay. And on the year now, we're at $31,006. That's over 81 trading days, averaging $382 per contract per 2-hour day. So 223 per contract per 2-hour day so far this month. Okay. Now I ought to bring those numbers down here, but this number is the important one because this is longer term. Okay. Anyway, let's get into it. Gold, I mean, all the markets started out pretty good today, but then they all got sideways. Now here in gold, see, we didn't have anything through here, but we did have a long trade right here. And another one right there, and another one right there. and then turned around and started going down. I missed this short right here, but I did pick up this one right here. We got 5 ticks on that one, and we got 14 ticks on the next one, and 10 ticks on this one. Put us at plus 29 on the morning session. Now you can see I missed a couple of trades in here. I missed that one. I missed that one. All the markets got really messed up after like the first hour. See how this is right through here? It was really nothing until we broke out. Then we had a long trade right there. And then it got really messed up again. And then, it gave one leg up, but didn't follow up with anything. Then we're getting into the break here. And during the break, we had a short trade right here. And that's pretty much it. Pretty much it on the morning session. On the euro, let's take a look at the euro. We had a shorting opportunity right here that we took. We got 5 ticks on that. There was a follow-up one here that I missed, and here, and here. And I missed them all. And then, like the gold, the euro got really sideways. And you can see down here in the slingshot how the cycle is kind of not really doing anything. That was our morning session on the euro. Okay, on crude. Let's see here on crude. But they were predicting all kinds of rain. Did you get a lot of rain and stuff, Valerie? Because last night I was watching the news for about 10 minutes. And it seemed like there was a lot of rain going over you, coming to me. Anyway, here we go. On the crude. I was waiting in here because we didn't have the slingshot set up just right. Okay, well, I was actually doing something else right there. But, yeah, it was tough. Got a nice shorting opportunity here. We picked up 5 ticks on. There was a shorting opportunity here that would have been a break even. And another one here that would have been a break even. A long here that I missed. Followed up by another long right there that I missed, and another one right there that I missed. And then it changed directions. Well, it kept going up, but then it changed directions down here. And it gave a shorting opportunity right in there. And then I'm just looking at the slingshot right now because it was all over the place. And here we're getting into the break. So there was a long right here that would have been a break even. And during the break, let's see. A long, a long, a long, a long, and a long. Then it changed directions and it dropped. Changed directions again. It moved up, but we didn't have a trade set up. So we put in a new high on the day at 26 and a quarter. Well, 26.23 on crude just recently. The ES also put in a new high recently, and that's good. That's what you want to see. The markets are getting more orderly. They're still providing us a bunch of opportunity, but today and yesterday were really choppy. Now, I'll go through the news events here in a minute while we wait for Dwayne to come on, if he's going to come on. Val, can you give Dwayne a call?
I don't know that I have his number.
Oh, you don't?
No.
Okay. I can give him a call then. Because he's probably sleeping in or something.
Well, he was up and put out a trade alert earlier.
Yeah, but he's 3 hours behind us. I don't know. I don't know. Okay, anyway, we went sideways right here on the ES for most of the morning session. See, there's the first 15 minutes, then it started to move up, and it gave one trade opportunity right here. Now, I didn't do anything with the ES today, but I'll just go through it with you. It gave one trade setup right here on the long side, then another one right there on the long side, and then everything turned around, and we got really choppy. We had good movement down here in the slingshot, but we got really choppy up there. And then again, this was just nasty in here. It's not anything I would want to trade in. Okay, and I'm pretty sure that's what I said this morning. Once we started to break down here, I highlighted this one. Now this was after the fact, but I highlighted this one, and that was good for a point. And then there was a long opportunity there. 36.95.
Thank you.
And then we got into the break. So there wasn't a lot of opportunity on the ES, though if you look at it on a larger time frame, and let's go do that. And then we'll go through the news events. And then if Dwayne doesn't show up, we'll wrap it up. Okay, but I want to look at it on a 30-minute. You see how it came down here early in the morning, hit the BBC, then we closed up above the BBC right there. Now, the next place we should look for price to go would be right here at the top of this candle. Spinning top is what it's called. And that's, got right up there, and then it pulled back a little bit, but it didn't pull all the way back to the BBC. It stayed up above, Dwayne would say blue and climbing, and it stayed up above the blue and climbing. And that was all we needed. Right here where it broke up above the red and falling, but the red and falling was above the BBC, so you're not really considering a short right there. You're waiting to see if the next bar is going to close up above. And once it did, and it started going up, then, from a 30-minute perspective, okay, from a 30-minute perspective, this is where we'd be, right here. Okay. You can see this gap over here got filled. And that's what we would be looking at with the ES. All right. Now, let's look at the news events. Here, I'll just do this. Okay, so today, there were a bunch of high impact news events today, but for the US, it was trade balance this morning. Came in worse than expected, but what do you expect right now, right? Final services PMI came in pretty close to what was expected. ISM non-manufacturing PMI, that came in better than expected. Now what that is a level diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So the purchasing managers are suggesting that they're loading up right now for when we break out of this thing. Okay, the economic optimism, what that is, it's a level of diffusion index based on surveyed consumers. Again, I think people are starting to be optimistic. You know, a diffusion index, what's that? It's like an average. They talk to a lot of people and say, okay, so what do you think about the economic? How optimistic are you about the economy? And okay, and people are optimistic, oddly. And this is all New Zealand stuff, and bank holiday in Japan today, and auto sales in Australia. That's what we had for the news for today. It's good to see that people are still optimistic, you know, given all that's happening.
Dwayne said he'll be right there. He's been having computer problems.
I see that. That's okay. Well, John's not in here yet, so I'm just going to keep going. We have right here was, this is kind of a weak shorting opportunity. You see how it didn't put in a lower swing right here? That's important because it didn't continue the trend. So this could be a turning point right here. We broke dynamic support, but it's pulled right back up to it twice now. And not breaking the swing low is a big deal. So from there, we have over here. There. That is a trend line. Now, this broke dynamic support as well, and it's got bearish separation down here. Over here, we have bearish separation, but the cycle's starting to move up, and we didn't put in a lower swing. So that's important that you see that and understand why. We have to have trending markets. Like over here on the ES. Now, this is another significant thing. There are so many nuances. That's why we can't just automate it. Here the ES is going down, and gold failed to put in a lower swing. The euro is going down. It did put in a lower swing. And crude oil is not doing anything. We have bearish separation over here. So there was just a short right here on the ES, right here. Okay, right there. And over here, it should have put in a lower swing. There was a weak short from right here because the cycle was starting to move up, and the MA1 was blue and going totally against you. The easy and the obvious. That's what Bert says when he does his Thursday webinars. Just wait for the easy and the obvious. I try to take everything that comes to me just so I can show you what to do and how to do it. But like the easy and the obvious. Hang on, let me go to my email. Huey sent me an example of the easy and obvious earlier. Here it is. See, we have this nice separation right here. Now, I don't have the brown line on all my charts anymore. But if you get that kind of separation between the brown line, the cycle, and the green line, and you get a close above the trend line. You see, we didn't hit the BBC here, but we got a close above the trend line. And the MA1 stayed the right color. Easy and obvious. Easy and obvious. And, you guys can wait around for that trade all day. And, it'll happen. It'll happen during the day. Today was messy, but I mean we're still up, what, 370, 371 today, something like that per contract. And I missed a whole bunch of trades. I only took one quick break to go take my allergy medicine, but well, I don't know what the pill actually is. Jada just says take this, but it does make a difference, especially right now. Anyway, does anybody have any questions? Just type them in the box if you have them. Okay, Dwayne's still not in. He says you got it going, but getting it going and then opening everything up and organizing everything are, you know, usually about 15 minutes away from each other. Okay, so we don't have a trade set up here. Now over here, it's arguable. And again, I say if it's arguable, you shouldn't take the trade. But that down close right there would be a momentum short trade. It would have been a break-even trade. Well, now it would be a break-even trade. Do I ever trade the Russell? I don't, Grant. The reason I don't is because I want to have everything be the same time frame, and the Russell would have to be like an 8-tick, maybe even a 10-tick range. Okay, that's why I don't. I mean, I think I have a Russell chart open. I'm not sure.
And I think we used to when it was still the $10 a tick.
Yeah, when they went to $5 a tick, that kind of turned me off. And you know, when you're paying $5 commission, it's all the same stuff. You see, this is a 4-tick range on the Russell, and it's all the same stuff, and it all works, but I don't do it. I got enough going on that I don't need to trade the Russell. Okay, you see how it's all the same stuff? Like right here would have been a long trade. Easy and obvious, right? Right there, right there. Short trades would have been right here, right here, right here, right here, right there. So, I mean, it's all the same stuff, and you can do it if you want to. But I would want to do it on a larger time frame. You know, like if you go here, bump that up to 8, then you don't overtrade. Okay. You don't have to, Dennis. I understand your question. You don't have to, but if you have an opportunity to take a trade when the MA1 is the right color, they usually work out pretty well. Our highest probability trade setup is when the MA1 is the right color, the cycle is the right color, and you have good separation. Okay, whether it's going up or down. That's the highest probability trade setup. And they do happen, but they don't happen all that often. Okay. Yeah, I gotta go change that on the website, Valerie. I was just looking at the email to Jeff. I gotta change it, say click the picture below.
Yes, or logo.
Yeah. But this is how I would do it, Dennis, if I were Grant, sorry. I was answering Dennis's question, but Grant is one that asked about the Russell. This is how I would do it with the Russell. I do an 8-tick range, because 8 ticks, I mean, still, that's your stop would be 16 ticks. And so you're still under $100 at risk. Okay. But you'd be expecting more.
Hey, just letting you know I'm here.
Each one. Okay. All right.
Yeah. Some issues on my end, but I think they're fixed. And
yeah, I had them yesterday. I had them yesterday. Okay. Well, you can take it if you want.
I can give me just like 2 more minutes.
Yeah. Okay. Well, let me go do my wrap up. Okay. If you have not taken a free trial, then go to the homepage at CFRN.net. And right here it says free 5-day trial. You click on that. And it'll bring you to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can do this if you want. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, we don't know that you took the free trial. So you got to do that. All right, and on the morning, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I don't know what happened there. That just annoys me. Paste that there. Get 5. There it is. Okay. Yes, Dennis, that's another nuance. And I'll show you that in just a minute. Okay. But today we made 5 ticks in the euro, 5 ticks in crude, 29 ticks in gold. Put us at 371 on the morning session. Today took 24 minutes and 3 trades to get to my goal for the day. At that point, we're up $100 a contract, and we took a total of 6 this morning. So on the month, we're at $671. That's over 3 days, averaging $223 per contract per 2-hour day. Now, going back to what Dennis just asked about, on the DOM, like let's say right here on gold, you see how we have 100 here and 65 there, and we have all these big numbers right up here? It's going to go to those numbers. Almost always. Not every time, but it's probably going to get up to these numbers right now. Okay, and that's on gold. So gold is looking really choppy right here, but we do have bullish separation over here. Now, it's like reading the tape, but we have our indicators to let us know, whether or not we should bother with it. You see how it's twice that right now? Gold wants to move up from right here. Once it gets out of this consolidation and chop, it's going to want to move up. And I would say it's going to move up to 1707.2. We have dynamic resistance here at 6.8, which is right there. But it's going to go beyond that. Now, crude oil right now wants to go up. Okay, and crude's pretty close to the high of the day. Yeah, crude's at the high of the day. It's just coming off the high of the day. But if you look at the numbers here, look at the totals down at the bottom. See, now it's wanting to go up, probably up to the high of the day. Okay. Now, those are little nuances that, well, that you may or may not be able to read in a book, but the only book that I really ever got anything out was Trading in the Zone, and there it went right there. You see, and now it still wants to go higher. Gold still wants to go higher here. You see, but it just did what I said it was going to do, and now it's 1707.2 is what I said before, and now it's gonna go higher. 1708 it looks like right now. Okay, and there it is. Bang. And there it is. Bang. So there's some merit to it, especially right now. The way that the markets are right now and how thin everything is trading. You can see it really easily. And I mean, right now it's going to go up to 1709. And there it goes. Now I think it's going to drop. 1707.6 maybe. And that would happen to be right where the BBC is. See, and that's just reading the DOM. That's using the indicators. We had a long trade right here. We had a long trade right there. We had a long trade right there. Okay, but I said it was going to go there when it was down here. I said it was going to go here, and then when it was here, I said it was going to go here, and then when it was here, I said it was going to go here, and now I'm saying it's going to go down here. That's my thought. 1708 right now. And that's how you make money. All right. Dwayne, I don't know if you're ready yet. I hear myself.
Ready I am.
Okay. Well, if you want to take it back out to fabulous Phoenix, Arizona.
Yeah.
South Mountain, America's largest city park. And I was explaining to people, you said you got it going. I said, yeah, there's usually like a 15-minute window between getting it going and getting it organized.
Right. Yeah, I think I'm both right now.
Okay. Okay. That's good.
I think.
Okay. Well, we just saw a different screen.
Yeah.
And now we don't have any screen.
Yeah, let me keep fidgeting with it.
He's working his way to the right monitor.
There we go.
There you go.
Now we're cooking.
Now we are cooking.
So, recap of the recap.
Today it took 24 minutes and 3 trades to get to $100 a contract.
Good job.
Every day.
I love anything else I miss?
I don't know, Valerie, is there anything else? Jeez, she keeps reminding me of all the things that I've missed.
Has John showed up yet today?
Not yet, no.
Okay, I haven't had a chance to spoken to him either. So, all right. Well, then let me do this. And you've already answered all the questions in the chat box.
Yes, I have.
Okay. Then let me jump over to this part right here, where I believe Valerie has sent me the recap. Did you send the recap, Valerie?
Yes, I did.
Oh, Michael and Dale did agree to come on and talk with us on the radio show. Well, that's exciting. So I'll get back with his guy.
Yeah, I saw that email come through.
Yeah, that's great. Okay, the recap I see, Valerie, it looks like up to Monday at 11:30 a.m. Maybe you could send it again, or maybe you sent it at a different channel. Or
I didn't. I copy and pasted so that it says Monday, but it should be Tuesday. I'll change that now.
Oh, okay. Well, no, I can do that. I got you. So week 92 recap until Tuesday. Okay. I got it. Thank you very much for that. All right, guys, here we go. Logic 92. Logic 247, week 92. Recap up through 11:30 a.m. today. We've had a 31 total alerts issued, 29 actionable, 2 never triggered. Don't have anything stopped out yet this week, but that is abnormal. Typically, we average 20% of alerts being stopped out on any given week. So this is a week where the market has just been kind, as we say. So while we're on the subject of logic, I'll just jump over to the logic channel and I'll scroll up to Sunday night. And if you have any questions on any of this as we go through it, please ask. That's the fastest way to get an answer, is to ask a question. Now, this was last week, the entire week. We had a total of 87 alerts last week. 4 never triggered, 83 actionable, 8 stopped out. So last week was a low number too, 10%. But again, the average is 20. We have 2 types of alert services. We have the Logic 247, which is based on current price action. Now, these alerts get posted around the clock, starting Sunday night, 6 p.m. Eastern, up until Friday afternoon at 5 p.m. Eastern, whenever opportunity presents itself. That could be 2 a.m., that could be 2 p.m. Now, the good news is if it comes out at 2 a.m. while you're sleeping, when you wake up and are ready to go to work, the alert will still be in the channel. And with most of our alerts, they have a tendency to trigger multiple times. I'll show you that in the course of today's show. So even when you're sleeping, Logic 247 is hard at work around the clock from Sunday 6 p.m. till Friday 5 p.m. So coming out of the gate Sunday night at 6 p.m. Eastern, we had a gap lower open. So of course we were looking for the gap to fill on the S&P, on the Dow, on the Russell, on the NQ, even on crude. Now here's gold, S&P, Dow, Russell, NQ, crude. When it says hedge, it means that crude, as an example, has presented us with 2 opportunities. There's a situation where we could trigger and run long, or we could trigger and run short. So if 2 opportunities are staring us in the face and we know that either one's a possibility, we'll put them both out as an alert, and sometimes both of them will end up being triggered over the course of the session. When you see the little Z's, that means it just didn't trigger. Russell, S&P, I duplicated an order. Here's another no trigger. Here's gold, here's the Dow, S&P, NQ, ES, Russell, NQ, crude, Dow, ES, crude, gold, the Dow, the NQ, and then only just one alert this morning before my computer took a hike on me. That was for the S&P. Now, I just kind of cruised through those, but if you're on the trial, you have access to the trial alert channel, which means you can go through and look at each one of those alerts individually, up close. You can go to your chart, because the idea is that you learn to see the setups behind the alerts so that the day comes when I send you an alert, it's no longer actually an alert, it's more of a confirmation of what you already saw yourself. So let's go to the Concierge Trade Alerts. And this does not come out around the clock 24/7. This is a static report issued each evening shortly after the Globex open. These numbers are good for the entire session, okay? So if you want to grab a screenshot of this, go right ahead. And then I'll bring up a chart of the S&P 500. Now on the S&P, we'll go first real quick to the daily chart. And shrink it down. Get all this out of the way. I was just showing somebody something in a entering session. Okay. So S&P 500, Emini Futures, the beginning of the coronavirus. Put our indicators on. The beginning of the coronavirus pandemic, there was a bearish cross which started this big sell-off that we've endured. It started up around 32.67 price, or 32.72, I've marked it. Took us all the way down to the swing low on March 23rd at a low price of 21.74. When price can go no lower, it will reverse and go find support, or go find resistance. When it gets support and it can't get through, it'll go look for resistance. Resistance sends it back to support, blue and climbing. This time over here, we had 1, 2, 3, 4 attempts to get through the BBC, couldn't do it. Backed up, found support, got a running start. This time, made it through up to resistance, which sent us back down. Support sent us back to resistance, which we were prepared for. That resistance sent us back to support, which held, and the support that held sent us back to resistance. Through resistance, established a new area of resistance right there. And then that resistance sent us back to support, the BBC. And now, as you can see, we're attempting to build another green daily leg that will ultimately, if we continue to move higher, will take us up to this area of resistance. And once we get here, one of two things will happen. We'll come back to the BBC again for support, or we'll power through until we hit this area of resistance, which then most likely will send us back in search of support for the BBC. On a 30-minute chart. And let me just get rid of these and these and shrink this down. Now, somebody had asked this morning in the Telegram channel about a window of opportunity. What does that really mean? Well, if price is moving up and I create what I call a window of opportunity, and this is really just a random drawing on the chart. I was showing someone something, but let's say I had put this here as a window of opportunity. All it's saying is that if price is moving up, we anticipate price entering the window here and then finding resistance somewhere near the top of the window. And then the opposite is true. If I were to just draw a window of opportunity over here and price is coming down, price will enter the top of the window. We expect it to trade to the bottom of the window before it runs into support. So from on an uptrend, bottom of the window to the top of the window, on a downtrend from the top of the window to the bottom of the window. That's how they work. And I typically use those to highlight counter trend opportunities. And a counter trend opportunity is after price makes a move to the upside, as it has done right here. Put the indicator back on. So a counter trend opportunity, I might come along and say, okay, we believe price is going to pull back to the BBC, find support, and give us another leg, just like it did here. You know, price made this incredible run up, pulled back to the BBC, took off, gave us another leg. So a counter trend, because we're in an uptrend, a counter trend move would be a move from here back to the BBC. The reason I don't put the counter trend opportunities in the actual alert channel is because a counter trend opportunity doesn't have quite the same high probability nature as a trend trade. So in the alert channel, for those who are learning our methodology, learning our strategy, learning how to trade, I only want to present you with the highest probability opportunities that I'm able to find. So I'll take a screenshot of this, put it in the discussion group, and say, okay, we have a potential counter trend opportunity. And in this case, it would be from 2877 down to 2870. So that's a 7-point counter trend opportunity. You might see this drawing like this in the discussion group, and I'll label it counter trend. Really what we're doing is we're waiting for price to get back to the BBC. It doesn't always pull all the way back to the BBC. Sometimes it pulls all the way back and even overshoots it a bit before it takes off. So what we're looking is to just not catch the top or the bottom of the move. As with all of our trades, we're looking to just take a little scoop right out of the middle. Okay, so last night's Concierge Trade Alert on the S&P was to consider being long at 2842, which I've already got highlighted right there. Now, 2842, you might remember, was also the Concierge Trade Alert Sunday night. Sunday night, it never triggered. It triggered last night at about 9 p.m. Eastern. So while we did get triggered on the short side, Sunday night's alert, Sunday night's alert triggered once, twice, 3 separate times. It was like a $300 opportunity, a $400 opportunity, then a $550 per opportunity. Then price reversed, came back up. I did the numbers last night, and it wasn't until I was actually on the phone with someone looking at charts that I realized tonight's or last night's Concierge Trade Alert for the S&P was exactly the same as the previous nights. So that's why we've got this line stretched across 2 sessions. So we did trigger, we ran up, and these are last week's weekly trading zones that you see on the chart. Partners, get this week's zones every Monday morning when I'm on time at 6:15 a.m. Eastern. I was running a little late yesterday. 6:15 a.m. Eastern, and then once they have the new zones, they're carved in stone for the entire week. Another question in the Telegram channel this morning was, well, when do I get rid of the old weekly zones? My chart's starting to get a little bit crowded. I can hardly see price. Really, the answer is every week. When you get the new zones, you should put those on your chart, but you might take the previous week's zones, just jot them down on a little sheet of paper on a notepad, because there's a high probability that price, as you can see here, Sunday night, we came right down to last week's weekly trading zone. where it held as good support, sent it back up to last week's weekly trading zone. We tried to get back to the zone below, didn't quite make it, but we consolidated at this zone. And then we traveled up to the next zone from last week where it held, and then price consolidated some more. And now the high of this session is actually a weekly trading zone from last week. So when I reveal the zones to the entire audience at large every Thursday, it's worth jotting down, because even if you're not a member yet, it can help you Thursday night, Friday, Sunday night, Monday, and here it is, Tuesday, still helping you, okay? So from 28.42 to the initial swing high is 65 points. So from, let's see, 42 to 65, that would be 20. So it's about a 17-point move. Alexa, 17 times 50?
17 times 50 is 850.
So that's an $850 per contract move. Price then gets back below the trigger. Important prices, important areas are almost always tested. So it's not unusual to see an alert trigger twice in a day. We often see it happen 1, 2, 3 times in a session, sometimes 4, sometimes 5. Just remember, important prices, important areas are almost always tested. So on this second trigger from last night's alert, we ran from 28.42 up to 28.82. That's 40 points at $50 per point. That's a $2,000 per contract move, or $2,000 per contract available. Whatever you might have traded from here to here, it's a $2,000 move. On the Dow, the alert on the Dow was to be long 23665. So let's find that. Two, 3, 6, 6, 5. Now, did it come back to test that number? The swing low over here was 23655, and that is the exact number. 236. No, I'm sorry. The number is 23665. Okay, so the answer is yes, it did. So on the first trigger from 665, we ran up to 937. Alexa, 937 minus 655.
937 minus 655 is 282.
All right, so this is a 282-point move at $5 a point. That's almost $1,500 per contract traded. And then we ran from 665 up to 24035. Alexa, 24035 minus 23665.
24,035 minus 23,665 is 370.
Alexa, 370 times 5.
370 times 5 is 1,850.
So this it turned into an $1,800 per contract move. Okay. Now, as a discretionary trader, of course, you can get out anywhere you want to get out. You can watch for exit signals like this. You can wait until you see that the market has put in some kind of a top and starts to retrace. You can take profit at a weekly trading zone. You can trail your stop on the way up, and the farther it goes, the closer you might trail, so that it comes back and takes you out. The market does the heavy lifting. We're like the usher in the old movie theaters where they would shine the flashlight to show you your way to your seat so you didn't trip and fall in the darkness. That's kind of what we do. We shine the light so you can see what's going on. Ultimately, you make the final decision. We show you where we think the potential entry is, where we think potential targets are. But once you take the trade, the market itself does the heavy lifting. We didn't make the market run up 282 points or $1,800 per contract. We were simply shining the light, showing you where we thought the optimal place was to take an entry. And then the chart itself will show you optimal places to take an exit. And also the weekly zones will provide you with an optimal place to take an exit. Remember, in a long trade, the final trade to target is always the zone overhead. Price is always trying to get to a weekly trading zone. So on a long trade, it's the zone overhead. On a short trade, it's the zone below. So moving on to the Russell. Last night's alert was to consider being long 1265, which we'll find right in this area. So from 1265 to 1286, Alexa, 86 minus 65.
86 minus 65 is 21.
All right, so that's $1,000 per contract move. Price then got back below the trigger. Remember, important prices, important areas, almost always tested. This time we made it up to 1303. Alexa, 1303 minus 1265.
1,303 minus 1,265 equals 38.
Alexa, 38 times 50.
38 times 50 is 1,900.
So this was on the second trigger, a $1,900 per contract move. And the risk required on this trade was pretty minimal. We teach our traders a 3-step methodology to help them determine where exactly to put the stop loss based upon where the chart tells you to put the stop loss. There's all sort of ratios and methodologies out there. 1 times the ATR or 1.5 times the ATR. Number of different ways you can determine a stop, trail a stop, or you can let the chart give you what we call an exit signal. I'll show you what that looks like on this market. After this trigger, the first candle that closed below the step line after it crossed over. You notice on the way up, the step line's on the left side of blue and climbing, crosses over. You get a red candle that closes below that step line. The closing price of that candle, 1288.30, is the exact exit signal. Getting out at a swing high is cool, but it's also done only by luck, because nobody knows that it's a swing high or a swing low until after the fact. So while the exit signal cannot get you out at a swing high or swing low, it can get you out in the neighborhood, okay? So on this trade, as you can see, stay on the left side of blue and climbing. Here, it looked like we might cross over, but the market wasn't quite done. So exit signal. Now, this exit signal is doing two things. One, it's getting you out of this long trade and potentially preparing you to take another trade on the long side. Because as price pulls back to the VBC, we expect it to hold, because it holds more often than it doesn't, and that could provide us with another leg to the upside. Let's see, question in the chat box. Dwayne, for educational purposes, can you explain how you would manage a trade like that off a 30-minute chart on a shorter time frame? I just want to see what type of drawdown I would have taken. Well, here's what I do, Brad, and you can book a mentoring session. I'll go over it with you. If I have to drop to a smaller time frame, like a 5-minute or a 1 minute, in order to take my entry so that I can have the appropriate stop loss amount, once I'm triggered in, I then go back to my 30-minute and I watch my 30-minute to give me the exit signal. So that's how I handle that. I hope that answers your question. If I didn't nail the question, then just feel free to type it in again and I'll take another run at it. Okay, the NQ. All right, on the NQ last night, consider being long, 88.40. It's going to be right here. So from 88.40, we ran up to 89.16. Alexa, 89.16 minus 88.40.
8,916 minus 8,840 is 76.
Alexa, 76 times 20.
76 times 20 is 1,520.
Okay, so this was a $1,500 per contract move. Price then got back below the trigger. It pulled back to the VBC, and it got back below the trigger, all in the same move. And this time, put in a swing high up at 89.88. So Alexa, 89.88 minus 88.40.
8,988 minus 8,840 is 148.
So that's 148 points. Alexa, 148 times 20. Alexa, 148 times 20.
148 times 20 is 2,960.
So that's a $2,960 per contract move. That,
I'm not sure.
thanks. Thank you, Alexa. That trade, these two trades, right? That's enough to pay for a passport. So moving on. After the NQ, let's see, we covered the S&P. We covered the Dow. Covered the Russell. Covered the NQ. Let's take a look at crude oil. Last night's alert for crude was to consider being long at or above $24. $24. So right there. On this one, we got several little triggers here, just back and forth, back and forth. That's just price consolidating, you know, right at the trigger. Now, crude pays $1,000 per dollar of movement. So the trigger's at 24. So at 25, that's $1,000. At 26, that's $2,000. At 26.50, that's a $2,500 per contract move from here to here. And have there been any exit signals along the way? Yep, there was actually one right here. Now, if you get an exit signal early on, but you see prices continuing higher, once price gets back on the left side of blue and climbing and starts to be blue and climbing, then no exit signal here. We would still be waiting on an exit signal up here. Gold. Gold kind of going sideways. The alert on gold was to consider being long at or above 1715, which was right. The swing high here was 1715.30. So that would have just resulted in a stop out. The short side for gold, 1708. That would be right here. 17. Oh, I'm sorry, it'd be up here. 1708. So 1708. Looks like John's ready to join us. All right, guys, so we'll pick up where we left off here in just a few minutes. Let me open up John's mic. John, your mic is open. Welcome to the show. John, are you there? I guess I better jingle him back. Can you hear me, John? John, can you hear me? John, can you hear me?
Hi. Sorry.
Oh, yeah.
The volume down a bit. I couldn't hear
Oh,
you.
no problem.
Hi.
Welcome to the show. Glad you could join us.
Yeah, thanks. Sorry, I'm a bit late today. Just there's a few lessons to learn from this incredible recovery that we've had. Remember,
Keep going. I want to step away for just 1 second. I'll be right back. Keep going.
7 weeks ago, it was looking really, really bad. I mean, we were plunging into March 23, 24, and the turnaround was actually pretty rapid, and really it's just been the mother of all rallies. We've never had anything like this. This is just incredible. We're pushing towards 9,000 on the NASDAQ. Wasn't that long ago, we were heading for all-time highs. And it's going to be interesting to see what the job numbers are like in a couple of days, and then of course at the end of the week. If there's any kind of a dip in the claims, which given that people are probably going back to work, might happen, it's hard not to see the market reacting even more positively than it is today. The one thing that's kind of jumping out at me today is the gold and silver, which I think you were just looking at, and the platinum and the gold stocks. Actually, they're all kind of, the gold came down and dipped just down to about 1697. I kind of said it might come back to 1670, 1700. It just a little bit low, below 1700. I wouldn't swear, I wouldn't swear my life on it, but it kind of looks like we're getting ready for a big run on the gold. I mean, I wouldn't rule out one more dip or two. You can never, because there's people who want the gold down, including probably the Fed. They might want to hold it back, and the commercials are potentially short big time, and some banks are short. So, but the groundswell of buying is just overwhelming. the shorts right now, and the gold actually looks dynamically poised, if you like, dynamically bullish, and it could really rip out of here, could race out of here pretty quickly. The silver, you know, they knocked the silver down yesterday, and it's come roaring back. You know, they knocked it down below 15. It's come back up. It's got a bit of work to do to sort of, you know, it's got to get really over 16 to kind of fix itself up, if you like, to be technically better. Palladium also came back, but it looks like it might have bottomed, and the platinum looks like it's actually gearing up for another run, similar to gold, that probably take us over 800, maybe even head up to 1,000 this time. But this is a move that probably is going to end up being a mega trend of sorts, you know, several $100s higher in the gold, and potentially, you know, $7 to $10 in the silver. I'd say you could really run from about 15 to 25 on this one. It really could be a humdinger of a move. We're at 25 trillion pretty much today, first time in history. People are saying the Fed's going to be, the Fed's balance sheet will be 12 trillion by 2021. The debt clock, listen, I don't know. I mean, the way things are going right now, one would expect we're going to recover from this and potentially maybe have a better market and a better economy than ever. But the debt clock certainly isn't telling you that. The situation in 2024 is so grim, it's almost worse than the Depression. So I don't know where they're getting this from, but you know, the debt in 2024 is 42 trillion. The
I'm back.
staggering 42 trillion. Maybe you want to pull it up, Dwayne.
Tell me what you want me to pull up.
The U.S. debt clock.
Sure. U.S. debt clock.
Okay. If you could go to the full page. Oh, that's me. Sorry. Okay.
This is about as full a page as I can get.
No, I got
the resolution's off on this monitor.
Yeah, if you could go. Okay, if you could go to the 2024. 2024.
Okay. 2024. There we are.
Yeah. Now, if you could just see the debt, look at that. It's gone up another 3 trillion since 300 billion since yesterday. Look at that, 42 trillion.
My goodness.
In 2024, you know, look at the debt to GDP ratio, 233. So if you could just go to the top left corner and go back to 2020.
Okay.
No, don't go that way. Just the top left, the back arrow on the browser.
Oh, on the browser.
Yeah. Okay. Then and just go to the left again.
All right.
So, okay. So look at the federal revenue, right? Okay, 3.5 trillion, and look at the debt. We're just closing in on 25 trillion, and the debt to GDP is only 116 right now, which is, you know, livable with. Look at the GDP, okay, the 21.3. It's dropped down a bit, I think, from 21.5. So go to the right arrow again now, up at the top left. Oh, sorry. Before you do that, go yeah, swing it over to the right-hand side if you wouldn't mind, on the 2020.
Okay.
Okay. No. Okay, down a bit to the workforce. Okay. Okay, look at the workforce. Okay, we were at 160, almost 160 million, right? Look at where we are right now. Okay.
127.
I mean, yeah. And now if you could go to the 2024 up at the, on the arrow, on the left arrow, on the browser arrow.
Okay.
Look at the GDP. Oh, sorry. Look at the GDP. 18, 3.5 trillion less in 2024. Look at the revenue. Look at the deficit, 5 trillion. And 42 trillion, and now go over to the employment. Look at the workforce. I mean, we're 127 right now. They're saying we're going to be 111.
Wow. So you're saying these jobs, a lot of these jobs aren't coming back?
Well, they're using some kind of formula. I mean, look, we got a 342 million population in 24 with a lower workforce. I mean, this is Armageddon. And
is that because many of the people have
maybe they're forecasting automation sooner and a lot of change in this.
What about all the people, all the baby boomers retiring?
Yeah, I mean it's. They may be way off, but I mean, look.
Any idea who programmed this? Who put this together?
No, I don't know, but I mean, look, it's been pretty spot on. It's
been around a long time, yeah.
Yeah, this is pretty. I mean, it's really staggering, frankly. I'm not buying it because I think that I really believe that. I mean, I think China's done. I think it's toast.
Look at the dollar to silver ratio they've got down here in 2024.
Right. I think the U.S. is,
so they're talking $4,500 an ounce for silver in 4 years.
Well, I think that's a bit off the charts.
I think
I'd buy a $4,500 ounce for gold, but I'm not sure about the silver.
Do they have a dollar to gold ratio on here? Yeah, right here. Yeah, they're pegging gold at $37,000 an ounce in 4 years.
Well, you never know. You never know. I mean, that guy Munger, Buffett's deputy, is basically saying we're going down the road to Venezuela.
Oh, there was some news on Venezuela. They've captured some Americans down there. Some mercenaries that were supposedly sent in to, I don't know, overthrow the government or something. Or
they didn't do a very good job.
They got caught. Yeah, so I guess that's when you're a mercenary, getting caught's the definition of not doing a great job.
I'd like to be in their shoes right now. That would be pretty miserable.
I would hate to be on a mercenary team where part of the plan was to get captured, so that you could do something from the inside out. I think I'd pass on that mission if I could.
Yeah. If you could go to Yahoo. Oh, sorry, not Yahoo. Sorry, go back to the charts, right? If you could put in TTD. This is
yes. Okay.
Could you actually, while you're on the gold chart there, Dwayne, could you squeeze it up and maybe put the weekly up, see how it looks?
Yeah, I'm just get all these drawing objects out of the way. There's weekly.
That doji there. It's like, that's why I'm saying I'm not swearing my life on it, because it could still go down. They could knock it down, but you can, I think, well, even the daily, if you look at the daily now,
we're at 24% fib retracement from the low put in the week of March 20th to the current week, building a doji right at the 24% fib retracement.
It's not giving up much ground, if you look at, I mean, it's obviously
no, we've held basically above 1700 for the greater part of 1, 2, 3, 4 weeks.
Yeah.
Okay,
Yeah.
so now back to this TTD chart that you wanted. Here it is.
Yeah. Remember when we called that, Dwayne? That was at 47.
I remember, yeah.
47. Yeah. Listen.
I remember asking you what the company did.
Yeah. It's I mean, look at it. It's on the point of going to all-time highs. This stock, it's looking
It's
very
some kind of a media company, right?
yeah, yeah. It's a kind of like a Google, sort of a Google thing. So, you know, since those companies have performed so well in this downturn, you know, this is getting the same sort of treatment. It's actually a fairly hard stock to trade because you see the way it jumps around all over the place. It's not an easy one to trade, but the other
Is it
one,
pretty popular among day traders?
yeah, I'd say so. But so
It's got some pretty good volatility.
the bid ask is there's often a lot of gaps between the bid and the ask and that sort of thing. The other one is to look at, this is a very, now, you know, TTD is just like a spectacular growing stock. You know, it's one of the fastest growing companies I've ever seen. ENPH, that's why I called it at 47. ENPH is another one, and that's a kind of a solar deal. Has
Enphase Energy.
yeah,
There we go. There's a daily.
yeah, it's off a little bit today, but it's I mean, look at the way it kind of ran up before the downturn. The other one is DOCU, which I think you use yourself.
DocuSign. Yes, we
Yeah.
actually do.
That's making an all-time high today. Look at that. So,
Well, more and more meetings happening at home, you know, so
right.
companies like Zoom and go to webinar, go to meeting, are seeing use like they've never seen before.
Yeah.
And if you're having a virtual meeting, then you need a way to virtually sign documents. And
yeah.
this is,
Put up DO. I think it's DOX.
in fact, it wouldn't surprise me to see somebody like a Zoom or a GoTo buy out a DocuSign.
Yeah.
Or just create their own from scratch.
Yeah.
It's just
look at DO. I think it's DOX.
X. Is that a similar kind of company?
I think so. Yeah.
Okay.
Yeah. This one was going crazy back in February. I actually tried to short it. It didn't give up much ground initially, but it finally sort of gave up, and it really had quite a big fall. STMP is another one.
Is that stamps.com?
Yeah. Look at that. I mean, this is.
Yep, this allows you to mail packages from home without ever having to leave, go to the post office, buy stamps.
I mean, you know, the reason why I like this stock is because look what happened before. I mean, do you see that gap right up to from 100?
Yep.
Yeah, and
it finally filled, and then once that thing filled, we're back up almost to the all-time highs.
Yeah, one that I mentioned here, around $18, $20, was IMMU. Performing extremely well. Look at that. Now it's a doji today, so I'd be a little bit careful if you're still long this stock. You know, if it were to turn down from here after this doji, I'd be inclined to possibly bail on it. But it's sort of arcing up a bit, and it's definitely surprised. This is the one that Goldman Sachs
Which one?
IMMU downgraded at $8 with a $5 target. So,
guys, this is a perfect example when analysts downgrade a stock. At least consider that maybe that's the bottom.
Yeah.
And when they upgrade,
well, look at this double.
The
fact that this has a double kind of breakaway gap.
A double bottom here around that $8 figure.
Yeah. I mean, we compared the reason why we were looking at this when it was a 20 was because we compared it to ICPT intercept, which they stopped the study and the stock went up like $150 in a day or more. And you know, this was way back when, but you know, in a way, the IMMU is happening in slow motion. What happened in a day or day or in a few weeks in this other one. So in spite of the doji there, look, it's not inconceivable this company could get taken over by some, who knows, Merck or one of the big pharmaceutical companies, because they've obviously got something pretty big. This is breast cancer treatment. And if they stop the study because the therapy was working so well, I think it speaks volumes that they may have a serious contender for a lot of different types of breast cancers. So, this is kind of, I guess the people are gradually getting the memo on this. And remember, another reason for buying this stock was Stephen Cohen came in at around 20 to 22 and picked up a lot of it. So he was involved in Intercept. Maybe he wasn't paying attention and he suddenly saw the same as what you heard on this show even before he came in, which was, this looks like Intercept, and since he made a ton of money out of Intercept, maybe he's thinking the same thing.
And neither one of these gaps.
It's not every day this guy buys after a 100% gain. So the fact that he did that was pretty telling. And look what's happened since.
There's been no attempt to close these gaps.
Right. No, it's a very strong stock, and it could go the way of Intercept. I mean, these things are, it's kind of like Gilead. They stopped the study, but Gilead. There was an interview with this Dr. Gallo, who is a big deal in the AIDS evolution.
Mm-hmm.
And he's not too hot on Gilead. Now, I would, the thing about Gilead is, or the remdesivir, is you never know if look, it actually works with Tamiflu, I believe, and a few other things. Maybe there's not a lot of publicity about that yet, but there is a very strong possibility that remdesivir and something else, maybe hydroxy or something else, there's a 1-2 punch, could knock this thing out. And
this heartburn relief therapy, has there been any more information on that study?
On which one?
There's some Pepsid. They were running a clinical study on Pepsid.
Yeah, that's an interesting thing. That could be the combo, that we're looking for. And obviously, I mean, look, it's just unbelievable the way people are still succumbing to this thing. The death rate is still very high in a lot of places, which is alarming. That it's just so scary the way this thing creeps up on people and knocks them out. That's nobody's immune from this. I mean,
drugs for heartburn, gout, and depression are now being tested as coronavirus treatments.
You could be the healthiest guy on the planet, and this thing will knock you out. So I think you got to be very. You really got to watch your steps.
Remdesivir, a medication originally developed for Ebola, made news this week after clinical trials showed it could shorten the recovery time for hospitalized patients.
Yeah, it does feel, actually today is a kind of a watershed day, because the global numbers are actually starting to go down, and some of the countries are really, really going down. So that's encouraging.
Aviptadil, is that one you're familiar with?
Oh, actually, it's a new one. That's an erectile dysfunction.
It is. It's a synthetic form of human vasoactive intestinal polypeptide. It's highly concentrated.
Well, one of the things that is a bit alarming about this COVID is the blood clot thing. It apparently provokes blood clots, which is possibly a reason why people are dying. Whether it's in the lungs or it's in the or elsewhere. So
here's another one. Colchicine tamps down inflammation in the tissues surrounding the heart, a condition known as pericarditis, and it reduces swelling and inflammation in patients with gout, A large trial in the U.S., Canada, and Spain will test 6,000 patients at high risk of developing severe cases of COVID-19.
Yeah.
See whether
You know,
this reduces their odds of being critically sick.
They're probably going to be able to use a lot of computing power to enter all these, responses and everything, and they may really come up with something that. Listen, I think I said it on the show that when this thing first happened. I said it's probably going to take a cocktail of drugs to knock this thing out, just like it happened with the AIDS. And
Right.
maybe more so in this case because it's such a sneaky thing, you know.
Well, it took about 20 years for that AIDS cocktail to go from like 20-something pills a day down to 1 or 2 pills a day.
Yeah, good point. Yeah, it's you remind people 20 pills a day was really a tough deal, and there was a lot of side effects. But I mean, today it's a walk in the park. I wouldn't call it that, but it's like comparatively speaking,
it's no longer a death sentence.
Yeah.
Being
I mean,
HIV
listen,
positive
there's almost no side effects from these AIDS drugs anymore. It's just and the fact that it gets rid of the by the way, one thing that's come out, they were saying earlier on that just go back up a bit.
Here's the one there. Here's that.
Just go back up a bit to the losartan.
Okay.
They were saying that people who take this were more prone to being infected. That's not.
So this is a medicine for
yeah,
hypothetical.
that's been disproven. That's been disproven now. So.
Okay.
Could you put up Apple? So actually, just before you take off Gilead, I wouldn't rule out the possibility if this thing sort of starts getting back up towards 84, 88 again. I think it will take a move higher. I don't think the story's over for Gilead yet.
Well, the most recent all-time high looks like up around 89.
Yeah.
And
I mean,
in the past, it's traded much higher.
It's got a lot of resistance up around the 88 level to get through, but you never know. If something dramatic happens, this thing could be on a new up leg before you know it. So
there's a weekly chart. So this thing's traded as high as 120 bucks.
I have a $130 target on it.
Okay.
Still, yeah. The Apple, APPO.
It's weekly, but it's daily. Okay.
It's probably going to run. It's almost to 300. It's probably going to run into trouble around that 310 area, 305 maybe. You can't rule it out going to a new high, but I think this guy, Dan Niles, that Indian analyst, he's pretty sharp about Apple. Yeah, he's not too. He's a little bit negative on it, and one of the reasons why the market's going up so much, especially the Nasdaq, is because Apple, being a large part of the Nasdaq, is a real driver. Number one, so is Microsoft and Google and everything else. And to a certain extent, Apple is a bellwether. So, but if Apple starts going down, if Apple starts turning down, it's going to take the market down with it, almost for sure. So just keep that in mind. Maybe if we could look at, let's have a look at Google, because
I mean, the whole this whole recovery is riding the back of, a handful of high flyers.
Yeah. Have a look at Google, Dwayne.
Okay, that's a daily.
It's I thought it was a bit better, doing a bit better. Well, it's having a strong day today, that's for sure.
Yeah,
but again, it's I think these stocks are gonna run into trouble shortly, up around this 1400 area, and this is even Amazon, it's kind of off its highs And I mean, you know, that's a gigantic gap on Google and all these other stocks. It's going to take an awful lot of work to get through the you know, to get much higher than where it is right now, in all honesty. And you know, woe betide if this thing turns down from here, which it you know, we're sort of you know, the market's kind of anticipating, you know, going, you know, opening up the economy, opening up the country, and when it actually happens, that's probably when the trouble's going to start. And another thing is,
already reported.
you know, we're in May now. We're having a good May so far, but sometimes May can turn sour. And the other thing is, we had a rally last year. You know, we were rallying for all of 19, which was a very big. You know, we had a huge summer rally, and generally speaking, years don't do the same the second year. You know, repeat performance the following year is somewhat of a rarity in markets. So, and as you can see, I mean, listen, today, I would say today's low is a fairly critical number to watch, given where we are today.
Today's number on the S&P.
On everything, on pretty much everything.
Here's the S&P on the 30-minute.
And that's
an
what kind
alert
of makes
to go
me a
long
bit bullish
at
on the gold, because if you look at where gold is right now, and if you look at where the market is, you can almost sense a turn, maybe by the middle of May or the 10th of May or something. The market could start turning down, and maybe gold and silver start heading a lot higher. And don't forget, look, there's more stimulus coming, which is obviously going to be very bullish for gold.
Right.
And you know, at some point the market might not necessarily react super bullishly to the stimulus, to more stimulus. You know.
I agree.
Yeah.
Anything else you want to cover?
No, listen, thanks very much for the invite.
All right, John. Thank you
Okay. All the
very
best.
much. Glad you're feeling better. Talk to you
Thanks.
soon.
Okay. Bye-bye.
All right. So we've covered the S&P. The alert was at 28.42 for the initial run, and I pull back to the BBC, back below the trigger. Important prices, important areas, almost always tested. Sunday night, this was an important price, important area, but the market never triggered the long side. And then doing an independent study last night, it just so happened that I realized after posting the numbers that the Monday night number was actually the same as the Sunday night number because it never got triggered. So we had one run back below the trigger, and then a second run. The Dow triggered once, triggered twice. On the Russell, triggered once, triggered twice. On the NQ, triggered once, triggered twice, triggered 3 times. This first little trigger on the NQ, it went from, let's see, the number for the NQ was 88.40. So we had a 30-point move. That's $600 per contract traded. Back below the trigger. And then we had the same move, 30 points at $20 a point. And then back below the trigger for the big move. And on crude, the alert was down here at $24, and it was at the trigger that the market consolidated. Now this first little run up took us to 25. So from 24 to this swing high at 25, that's a $250 per contract move. Back below the trigger, another $250 move, back below the trigger, about $100 move, back below the trigger. And then the move is on with very minimal risk, and it's run up now basically $2,500 per contract traded. So that covers the Concierge Trade Alerts. We've covered the Logic 247. And once again, the difference between the two, Concierge Trade Alerts are based on historical price activity. Logic 247 is based on current price action. And when those two are pointing a finger at the same important price, important area, that makes that a high probability opportunity. And so while the Concierge can be traded standalone and Logic can be traded standalone, when you've got both of them pointing at that same important price, important area, it almost always deserves a second look. Okay. All right, with that, let's go to our good word for the day. And yesterday, we talked about learning to think strategically, part 1. Today, part 2. All who are prudent act with knowledge, but fools expose their folly. Proverbs 13:16. By taking the time to acquire knowledge, you'll be ready for the opportunities life brings. If you are not prepared, they'll pass you by and go to others. God said in Hosea 4:6, my people are destroyed for lack of knowledge. So, observe this. Number 1, strategic thinking prepares you for the future. None of us knows what tomorrow will bring. Proverbs 27:1 says, don't brag about your plans for tomorrow. Wait and see what happens. The only thing that's worse than the uncertainty of tomorrow is having no plan and strategy for your life today. Number 2, strategic thinking reduces the margin of error. Whenever you shoot from the hip, you increase your margin of error. As traders, I think you understand that. You walk up, you look at a chart, you don't do any real analysis, you just get some kind of gut instinct or feeling. Now, I'm not saying there aren't traders out there with the ability to trade from the gut, and most of us probably feel that way when we first start studying charts. But then when we start putting on and taking off trades, we realize that our gut sometimes don't quite get it or got it. So, strategic thinking reduces the margin of error, just as in trading, technical analysis helps to reduce the margin of error. If you see a spot that you think could be potential resistance, you can do one of two things. You can avoid it, or you can go, well, yeah, that looks like potential resistance, but maybe this time it won't be. Now, which one is strategic thinking? And which one is just being hopeful? And hope's a powerful thing. It's just not a good trading strategy. When you shoot from the hip, you increase the margin of error. It's like a golfer stepping up to a ball and just whacking it before lining up the shot. Misaligning a shot by a few degrees can send your ball 100 meters off target. Strategic thinking lines up your actions with your objectives, just as lining up a shot in golf helps you put the ball closer to the pin. The better you are aligned with your target, the better the odds that you'll be going in the right direction. Number 3, strategic thinking gives you influence with others. One executive quoted, "Our company has a short-range plan and a long-range plan. Our short-range plan is to stay afloat long enough to make it to our long-range plan." That's not really a strategy, but it's the same position that some of us find ourselves in. The person with the plan is the one with the power. So whatever activity you're involved in, being a dad, being a trader, being a husband, being a pastor, whatever it is, whatever activity you're involved in, strategic thinking is essential to your success. And anytime you're not sure, talk to God about it, because He has the answer. And that's our good word for the day. Now, if by chance you've not taken our free trial, which really is free, there's no credit card required, we offer everyone 2 free trials over the course of their lifetime, 1 every 6 months, so you use up your 2. But if you've never taken the trial, you can start today by going to eminitrainingschool.com. Register there. Valerie will contact you and provide you with all the information, links, everything that you need to start receiving the alerts as early as this afternoon. When the concierge alerts come out tonight after the Globex Open, you'll receive those. You'll have access to the discussion group. You'll have access to our platform, our indicators. You'll be able to attend class tomorrow morning with Michael from 9:30 a.m. to 11:30 a.m. This goes on for 5 days. At the end of the 5 days, because you've been exposed to everything we offer, because you've been allowed to ask any question you want about anything we do, at the end of those 5 days, you are in a good position to make a well-informed and intelligent decision whether or not what we do is right for you. Now, we just took a look at those employment numbers that John had us bring up on that debt clock. A lot of people lost a lot of jobs. Some will have jobs waiting for them when this is over. Unfortunately, some of those jobs may not come back. And trading is certainly not the solution for everyone. But many people who might have never even thought of being a trader before are in the process of finding out right now with us that trading can be a viable solution for them. You might think, well, you know, I've gone to some of these webinars, maybe even been to a seminar, tried watching those people on TV talking about it, and it seems just too complicated. I don't think I can learn all that stuff. Well, the good news is you don't have to learn all that stuff. You don't have to know what a trend is, or a tricks is, or an advanced decline line, or any of a million number of different things. We don't teach, not because we don't respect them or think they do the job they were created to do. Michael and I used to be the king of oscillators, indicators, boy, you name it, we were all over it. And we had it, and we ran out of stuff to buy. We started rolling our own. But because we always seemed to be just one mouse click away from greatness, we just had to create one more filter, one more thing. Well, every time we created one more thing, seemed like we were still just one more mouse click away. So we stopped. We put on the brakes and we went in the opposite direction. Instead of adding things, we started getting rid of things. If things weren't contributing to the bottom line, threw them out. That can be a painful experience, especially when it involves stuff that you rolled your own. Because you put a lot of time, thought, energy into something, and now you're just going to toss it. Well, if it's not contributing to the bottom line, yes. People tell you that you need to know the correlation between different things, and you need to know what things are uncorrelated and all that. Well, for their methodology and for their strategy, that may be true. It absolutely might be true that you need to know those things. If you were trading crude last night, basically you needed to know that our highest probability opportunity was to simply get long crude at $24. And here's the results. You didn't have to know anything about Bollinger Bands or MACDs or stochastics or any of the other things that I've mentioned. And again, I'm not knocking those things. I give benefit of the doubt, and I believe that every one of those things out there does exactly what it was created to do. I'll say it again. I believe that every one of those things out there does exactly what it was created to do. We just don't use them because we don't require them to do what we do. And price triggers, pulls back to the BBC. We expect it to hold and be good support like it was here. And it gives us another opportunity to be long. That was on the down. On the S&P, we triggered, pulled back to the BBC. It held as good support. Off we go again. On the NQ, we got a bullish cross. Price pulled away. Price got below the trigger, offered a nice $1,500 per contract move. Pulled back to the BBC where it held, because it holds more often than it doesn't. I forgot to mention it held here. Now it's holding here. And away we go. And on this move so far, from this pullback, price is, or the step line is just now getting on the right-hand side of blue and climbing. So we don't have an exit signal yet, but because the step line has crossed over, if this current candle were to suddenly reverse and close red below the step line, that would be the exit signal. Okay? So trading's not easy, never has been, never will be. And for those websites out there that promise things like 99% accuracy, on behalf of those members of our industry who promise things that are unrealistic, I apologize. You may not always like what we say, but we'll always tell you the truth as we understand it. And we'll never insult your intelligence. We'll never make statements like 99% accurate. Now, they may have been able to tweak their business model in some manner that allows them to make such a statement and, you know, and somehow remain within the letter of the law. Okay. But ultimately, you have to decide. And if you're shopping a couple of different groups, who you're going to join. Well, I'm going to tell you the highest probability is you're going to join the other group. If you compare us to some of the group, chances are you'll choose them the first time out because they're going to make you outlandish promises. And because you're new to the world of trading, you don't really know it's an outlandish promise. I mean, they sound pretty convinced. They sound pretty convincing. So if one guy's saying, hey, you can make 100 grand a day or $100 a day, or another guy's saying you can make, 100 grand a day, wow, who are you going to go with if you don't know any better? It's only after you've chosen the one with the false promise and gone with them and found out that that really wasn't the reality that they preached, well, we tend to play second fiddle. You know what? That's okay. Whenever somebody tells me, yeah, I've been looking at, a couple different outfits and I think I'm going to go with the other outfit, I don't go into a sales pitch. I don't try to twist their arm and convince them to go with us. I wish them all the very best because I know that 9 times out of 10, be it 3 weeks, 3 months, some point down the road, they'll be back knocking on our door going, hey, yeah, I went with that other group. And I say, yeah. And they usually go, well, I probably don't need to tell you what happened. And I say, no, you don't. You don't have to painfully paint the picture of what happened. How can I help you? Will you still make me that same offer that you made me before I spent all this money and lost all this money? And the answer, of course, is yeah. Yeah, we will. That's if they have any money left. So I'm not saying we're the only people out there that can teach you how to trade. There are a lot of decent people out there. And I'm sure a lot of those decent people have very viable ways of trading the market. Some may be more complicated than others. So what Michael and I have spent the last 15 years doing is not only creating a method that we believe based on if you look at the history of our recaps over the past years, not only something that is pretty reliable, it's pretty simple. In other words, it's not so convoluted and complicated that you just never actually really understand it. I mean, we've got a couple of color-coded lines, and once we explain to you what they are, what they do, why they do it, then it just becomes logical. So that when you look at a chart, you go, oh, well, I can see the price is trying to get to that weekly trading zone overhead, or I can see that it's trying to get to the weekly trading zone below. Beautiful. You just accomplished something that many traders struggle with for years. Now let's dial it down, smaller time frame, and let's see if we can find a low risk, high probability entry that will allow us to participate in that journey up to the zone or down to the zone. But the only way you'll ever really know if what we do is right for you is simply by going to Emini Trading School.com, fill out the form, watch your email. Valerie will send you all the information you need, and then I'll see you this afternoon or tonight in the Telegram channel, and I'll see you in the live training room tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell. Could we insert some awkward silence? Yeah, right here. Insert awkward silence ahead of the outro. Okay. No, that's not enough. Just a little bit more. A little bit more.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.